if the large power users are able to exercise choice, and they can always go to a cheaper generator and therefore leave a more expensive option, are the other consumers now having to pay more?
How should South Africans understand the relationship then between market reform? Because as we've said, this seems to be, the wholesale market is more for your institutional users. So the ordinary South African, you and I, we're probably sitting there saying, okay, and then what? So what is the relationship then for an ordinary South African between market reform, reliability, affordability, investments and jobs, because those are the key things.
Welcome to Energy Conversations, powered by Kani Development Solutions and the African Energy Leadership Center at the Wits Business School.
Welcome to Energy Conversations, where we translate South Africa's energy transition into clear system understanding and credible participation. I'm Thokozile Zambane. I'm your host, and I'm here to take you on this journey of understanding the South African energy sector better. Today's conversation focuses on electricity market reform, one of the most important structural shifts currently underway in South Africa. We are joined by Keith Bowen, who is the Senior Manager, Market Operator at the National Transmission Company of South Africa, and he is directly involved in shaping how this market is being structured and operationalized. Thank you for joining us, Keith.
Yeah, thank you for having me.
Keith, let's start with first things first and first principles. For South Africans hearing this term for the first time, what is a wholesale market and why does South Africa need it now?
Yeah, thanks for the question. I think the main thing is that we're really in a market environment. The competition's already starting in terms of consumers being able to make choices. And I think that's really what defines a market. It's consumer choice, that they're able to go and buy a product, use energy from different sources. So technology has made a huge change in terms of photovoltaic on the rooftop solar cells with batteries or without batteries, and consumers being able to then get their energy from those sources as opposed to the grid. And that made quite a fundamental shift. But also it means that we're finding new alternatives, new generators coming onto the grid, and they create that wholesale competition because they go and they look for buyers. They look for people who are willing to pay, whether it's a long-term power purchase agreement, so it's a committed over 20 years. They go and they look for the buyers, and the buyers then commit to these contracts. So when we talk about wholesale as opposed to retail competition or a wholesale market, you're really looking at it at kind of really large scale. So it's bulk suppliers. So mostly it tends to be large power users. So it's your Sasol's, Anglo-American, those kind of corporates that they can go out and buy. They can go and find new suppliers. And so they compete with one another. The generators compete and they sign these long-term deals. But to a large extent, it excludes retail, so it excludes people at home. So yes, the wholesale market really focuses on the large scale supply and demand. Does mean that municipalities theoretically are able to go out and source supply from different generators. But at this stage, that's quite limited, mainly because of regulation and rules around the Municipal Finances Management Act and other kind of regulatory processes. But ordinarily, they should be able to go and compete and find supply from alternative generators. And that's really how we define a wholesale competition. It's more the scale than anything else.
What physically changes in how electricity is actually sold and bought?
So one of the important things to bear in mind, firstly, just kind of from a practical point of view and how we deal with what we call wheeling.
Yes.
Wheeling of energy means that a generator can connect to the network at one point and supply to a customer at a totally different point of the network. And that energy will flow across the Eskom network. So obviously, as the National Transmission Company South Africa, we have the high voltage transmission network. And then Eskom Distribution will have the lower voltage distribution network. Municipalities also have network that they build and operate a network. So now it means that once you have that open access, which is built into the license, that network providers have to allow open access. It means customers have choice and generators can access that same network and supply to a customer. It does mean that we have to have quite strict kind of administrative processes to kind of measure energy in at one point and then who's taking it out at the other, allocating that energy correctly. And so that's the wheeling framework. And that's been in place really for what, 15 years? But it really changed 3 years ago when the president opened up the market by saying you didn't have to get a license to generate electricity anymore. You kind of just had to register with NERSA.
Okay.
So it really meant that now there's a lot more generators being built, and they can come and connect to the network and sell directly to a customer. But mostly those customers lock themselves in to long-term agreements.
Okay.
So they can't go and shop around. Once you've
Okay.
committed to that agreement, that's who you're buying from. So it kind of then excludes smaller scale consumers like me and you and me at home. We're not in that market. We can't commit to 20-year agreements. So for us, it's more about we will still buy from the local utility. They in turn might be able to go and source energy from other suppliers. So that's why I say at a wholesale level, it really is limited to the large scale, but they will lock themselves into long-term power purchase agreements.
That makes sense. But it sounds like there's a lot of coordination that needs to happen. And your role, I mean, senior manager market operator, which takes me to my next question in that what is the market operator? What's the role of the market operator in simple terms?
So I think to come back to that point that now we have this network that everybody's using. So firstly, you have a system operator who manages the grid, keeps the grid in balance. And it's an important understanding of the electricity supply industry that when someone wants to consume, when they turn on a flicker switch, whether it be a large factory or you and I at home turning on the kettle, energy must flow immediately. There's no putting in an order, waiting 3 months for delivery, whatever. You've got to have that energy instantaneously. So it means the system operator is coordinating the entire grid, managing that energy is flowing all the time. Where we come in as the market operator is now to try and deal with the transactions that underpin that. So there's going to be transactions that would happen, kind of ensure that the generators and the customers are making arrangements and are in balance. So it's an important kind of concept because on the day, the system operator is balancing supply and demand, making sure that that energy is flowing. It needs to know ahead of time that people have committed themselves into a contract that is applicable, that they're able to implement on the day. And so that's why the whole idea of the South African wholesale electricity market is that we start introducing day-ahead exchanges, a day-ahead trading, intraday, and then a balancing mechanism, which now after the fact we go and measure what actually happened. And that's where the market operates that coordinating activity to match the commercial and the trading with what actually has to happen in real time.
Keith, I wonder, and maybe just unpack that a bit more, especially because, you know, you said that these large clients enter into these long-term PPAs, but then you're also speaking about a day ahead or an intraday market. How does that all then connect?
So one of the big things at the moment is that Eskom, to a large extent, distribution and Eskom generation, are the backup for all these customers. So when Sasol signs an agreement and they get delivery, what they don't take from that generator, they buy from Eskom, and they'll pay Eskom for it. What needs to start happening, or kind of it's a process that we work through, is that those generators need to start becoming balance responsible. They need to indicate what they're going to produce day ahead, and then we hold them accountable through the balancing mechanism to what they actually did on the day. But it does mean that there would be deviations. So if Sasol's buying some of their energy from the generator, they might want to actually start taking on their own portfolio and managing their portfolio so they can go to the day ahead market for surpluses or deficits. If they know how much they have to consume, they know how much they're buying, then there's a differential that they can go to the market to buy if they're short or sell if they've got too much energy. And then you start developing a little bit more liquidity and a lot more transactions happening through a sort of market mechanism that helps everyone clear themselves out before the day, so that they're not then exposed after the fact for any deviations.
So Keith, I mean, everything that you're describing is quite different from what's currently happening or what's been the traditional South African electricity market. Could you just take us through what has materially then changed over the past 18 months and to make this market reform real and move from a theoretical place?
Yeah, so I think, as I mentioned, one of the big things the president opened up the market by allowing that you didn't have to wait for NERSA for a license. So even though we've had a wheeling framework, so this whole concept of allowing for open access has actually been in place since 2008. But in order for a generator to be allowed to sell to a customer, they had to have a license. And the regulator read the rules to say, unless you were in the integrated resource plan, I'll talk about the integrated resource plan, and the minister had given you a determination, you could not get a license. So they actually kind of almost blocked the market for a long time. And honestly, also electricity prices were quite low, and they kind of, as they've been going up, it starts making it more viable for generators to come in, particularly as photovoltaic and wind prices have been coming down, or the costs of building them have been coming down. It makes it much more viable for people to build large-scale wind and solar and go directly to the market. In the past, we had the renewable IPP program, so the Independent Power Producer program run by government, and that's where the IRP comes in. So the Integrated Resource Plan, if we take it back a step, it's a kind of a plan that government comes up with as to what we think new generation capacity is required, looking at demand going into the next 10 to 20 years, what our kind of obligations are in terms of climate change, what kind of technology do we want to see built, and then it comes up with a plan to say every year we expect this sort of capacity to be built. Historically, that was always then turned into a determination by the minister. The minister wrote, it's called a Section 34 determination. Section 34 is part of the Electricity Regulation Act. So the Section 34 determination then said, this capacity that has been allocated in the RP, or has been determined in the RP, will now be allocated to IPP programs procured by government, and Eskom would then be the buyer. Now that buying role has moved over to the National Transmission Company South Africa. It means that all these new generators were being built, but only through the government programs. So now when the private sector wanted to come along and say, well, I want to build for a particular customer, the regulator said, no, you don't have a determination. We're not giving you a license. And eventually then the presidency then basically went through the process to firstly lift the threshold. There'd always been a threshold of 10 megawatts that was lifted, then to 50, then 100, then removed entirely. So now a lot of generators went and they did their business cases, they went and got funding, they found buyers, as I said, Sasol, Anglo, many large corporates going through the program. And now we've also seen traders getting licenses. So that's also a big change. A lot of traders coming in. They're now acting as that sort of intermediary between the generators and the off-takers. They go and they find the buyers and do a lot of that processes. That means that they now can go and get the banking, get the finances, may have with bankable contracts. So the generators can now go and build. And so we've seen since this is about 18 months, we've gone from maybe doing 10 to 20 megawatts at a particular point in time of wheeling, and it's very small. So mainly we did the sugar mills. There were a couple who had their own generation that was selling to parties and stuff. Now we've gone to over 800 megawatts of capacity doing wheeling just in the last 18 months. And that's likely to go by another couple of thousand megawatts. So that market is developing, and it's happening just organically. Well, the president lifted the threshold. Now people are going out and they're finding and they're buying and building new capacity. The sort of burning platform from our perspective, and here I'm because I'm putting almost like a system operator hat on, is that the system operator is trying to keep the system in balance, but it doesn't necessarily know who's producing what every day. Because now, when it was less than 50 megawatts of wheeling energy, it really was in the margin of error. You didn't even really notice it on the day. But now that it's 800 megawatts, you start worrying about what's going to be produced by third parties on the day. And it's going to grow to over 2,000 megawatts probably in the next 12 months. That is a real problem for the system operator. How do they manage this grid when you don't know what's coming tomorrow? You can do forecasts, we can do all that work, but the most logical thing, at least from my perspective, is that you put the responsibility on the generators to tell you what they're going to do, and then you hold them accountable to that. So they tell you, let's say I'm a 100 megawatt wind farm, I'm going to produce 80 megawatts at noon tomorrow, and then 70 the hour after, etc. They give us that schedule of what they're going to produce, and then afterwards you hold them account. If they don't produce it, they basically have to buy it from the balancing mechanism to make up the shortfall, so that their customer will get the energy, but they're buying it from someone else to make that good. And what it does mean is that by putting the responsibility on the generators, the system operator has some comfort, at least, that the information they're getting day ahead is as close to accurate as what the generator can possibly provide. And so they can manage the grid better because they're dealing with this fact of the wheeling being managed through the balancing mechanism.
We've looked at what's happened over the past 18 months. What could South Africans be looking forward to in the next 12 to 24 months? What are the key milestones and important milestones that we need to be looking out for?
Again, from our perspective, for the say when the South African wholesale electricity market, the intention is for us to open that up for external participants. So we've launched internally the new platform. We're testing it with Eskom distribution, Eskom generation, the central purchasing agency, which is essentially the single buyer office inside Eskom. What was the single buyer office is now the central purchasing agency. They're trading on this daily now internally, but the idea is in the next 12 months that becomes open for external participants. So the traders, the generators, potentially large power users could actually start trading on this market. And again, most of it is for dealing with the shortages or surpluses that they might have on a daily basis because they've dealt with long-term contracts. Physically, they've got these contracts already in place. They can come to the market for the shortfalls or for the surpluses. So that's something we want to see in the next 12 months. The other thing is making generators become balance responsible. So they have to start declaring what they're going to do. So at the moment, they don't. They do give a forecast, but they're not bound by that forecast. The forecast is purely indicative. So the system operator has no comfort that that information that they're receiving is valid because there's no consequence. So by putting a balancing consequence in place for those generators, the forecast becomes a little bit clearer, that we know what's going to happen because there are penalties if they're wrong. They kind of penalties in inverted commas because those penalties are a price associated with the energy shortfall or the surplus relative to what's going on in the balancing mechanism. So the idea here is that by making people more accountable, then the system operator has a bit more comfort that it's able to manage the grid and keep the grid in balance and avoid any disasters on the day.
Just on the point around the generators and needing to declare what their forecasts are, at what point, and I mean, because obviously there's the whole project development process, which can take quite a number of years. So at what can they actually confirm that, look, I'm going to be able to generate X amount of megawatts, because some of these projects sometimes don't get to financial close. So at what point do they need to be sharing this information?
Technically, they don't have to do anything until they go into operation, because then they have to start forecasting what they're going to produce. But a year out or 2 years out, look, it's useful information for us to know from a planning perspective, and the grid does need to know, so the grid plans around it. But from a market perspective, there's nothing binding them until the day ahead that they have to tell us what they're going to do. So technically, our market is very short-term focused. It's all about what happens tomorrow and what's happening today. We do nothing about what's happening next year or 5 years out. That's really these long-term contracts, more the physical bilaterals. It is possible that as the market develops, once we have this day-ahead market and an intraday, is that other players, like for example, the Johannesburg Stock Exchange, they use their derivative platforms to allow people to start hedging. They start doing derivative contracts for future electricity prices. So while we're producing the prices for tomorrow and always focusing on tomorrow, others might be contracting for what the price would look like in July, August, September. And that's a different kind of market, because now you're doing derivative trading, whereas we're focusing on day ahead only at this stage.
How should South Africans understand the relationship then between market reform? Because as we've said, this seems to be, the wholesale market is more for your institutional users. So the ordinary South African, you and I, we're probably sitting there saying, okay, and then what? So what is the relationship then for an ordinary South African between market reform, reliability, affordability, investments, and jobs? Because those are the key things that South Africans would be looking for. And if we can just take them each, just starting perhaps with reliability.
So I think the big thing from a reliability perspective is that at large scale, the consumers, the large power users specifically, are trying to make sure that they're capturing or able to meet their future demand through long-term commitments, which means that you get bankability. So new generation is being built, which will enhance reliability. There is always going to be that gap as to what you're doing about customers who can't exercise choice. And so there's phrases like captive customers, that they are captured by the municipality or the local distributor, that they can't move over to make choice. So that really is still a space for the regulator to make sure that their interests are being managed. There are some important considerations in around affordability. If the large power users are able to exercise choice, and they can always go to a cheaper generator and therefore leave a more expensive option, are the other consumers now having to pay more because the big pot is being supplied to smaller group of customers, which means the costs are going to go up. So one of the big things about this reform process is a tariff reform mechanism to look at how do we restructure tariffs. So some of the costs, like for example network charges, network costs, you make sure that all consumers pay for the network regardless of who they're buying from. So when Sasol buys from a third party, they're buying their energy, they're still paying the network charges, they're still supporting the grid. When people build PV on rooftop and batteries, etc., they're supplying themselves, they still need to pay for the grid because the grid is the backup. And the grid needs to be maintained. I know it's not a popular position, but the idea is that backup is really important and people depend on it. So you need to be able to support that and make sure that earns its revenue. There is another concept of generation capacity. So now Eskom at the moment has a lot of capacity that is built, which acts as the backup for everyone else's supply. At some point, you need to start paying for that almost as like an insurance premium. You're paying for the backup so that if your PV facility is not operating or the wind is not blowing, you can get energy, and you're paying for someone to stick around and supply that energy when you need to. I always use the argument is that when we look at this integrated resource plan, so the IRP in the future always looks at our future grid is predominantly supplied by renewable power, but it also looks to back up either through batteries, gas generation, and other options that you would build. Those options are there as backup. They're not there for the energy component. They're there to supply the grid when the sun's not shining and the wind's not blowing. So you need to make sure that those facilities are built. And that mostly, if we're talking about gas as the backup, means that the cost of building the gas power station has to be recovered by all consumers, even if they're not using it, because it's a backup for when the system requires it. So again, not a popular opinion, but the whole idea is that backup is actually important for the grid and needs to be recovered from all consumers. So when Sasol and others are buying, and they have the freedom to do so, they're still contributing for a capacity backup system should they lean on it. So if their supply doesn't meet their demand, they will come to Eskom or to the market, and then the market needs to have that capacity available to be able to supply them. And so we pay for capacity as a separate kind of service. The third one, and it's really important from the discussion of affordability, is subsidies. Right now, built into our entire utility tariff mechanism or retail tariff mechanism, there are built-in subsidies, some of it on a network basis. So we subsidize rural consumers from urban consumers. That will remain. The network charges will recover some of that tariff cross-subsidy. What really becomes problematic is the affordability subsidies. So when households who depend on lower tariffs now need to be able to ensure that shouldn't change when the moment the market opens. They shouldn't lose that tariff that's keeping them going. But then distribution and the municipalities need to be able to earn a revenue or get paid through a subsidy framework or a cross-subsidy mechanism. So at the wholesale level, we might charge customers like Sasol and those who are buying for themselves, they would pay us some sort of surcharge or surplus to cover for the subsidies that need to go to other consumers. Because otherwise, distribution and the municipalities have a huge risk that they're paying the large power users who, one, are paying, and two, are subsidizing other consumers. The moment they start choosing third parties, they lose that revenue. And that is part of this whole subsidy kind of consideration, and the wholesale tariff needs to have a subsidy mechanism to allow that those consumers are still earning or getting a tariff that makes them viable, basically.
That, I mean, and very important considerations, because one, the system needs to operate whether or not you're buying from it, but the day, like as you've said, the ability to still be able to use the system, you do need to be paying for that. And I think it obviously, for ordinary South Africans, the biggest fear would be if all large users are off buying in their own private world, I wouldn't be able to keep covered, because then what happens to the rest of us? And how is that being looked at right now? How is that going to be managed?
So NERSA is working through a paper on wholesale tariffs, which hopefully will be made public in the next couple of months, on the potential design for the wholesale tariff and what happens around subsidies in that framework. And I think then there will be consultations with public and the industry, and then they will turn that into a wholesale kind of mechanism, which hopefully will kick in within a year. And that then establishes those ground rules as to how we deal with subsidies, because everyone knows that they're there and everyone depends on them, particularly municipalities and distribution, to make it viable. And we have to make sure that we sustain that. And it comes back to that concept of the utility death spiral. You've probably heard about the utility death spiral, but the principle then is, if all these fixed costs, whether it's the generation capacity, the subsidy framework, even the renewable IPP program, which, you know, when it started in Bid Window 1 and 2 were very expensive, all of those fixed costs need to still be recovered partly from consumers who are now moving into out of that pool into choosing their own suppliers. They need to contribute still to that pool. Otherwise, as I said, that cost pool is just being part onto a shrinking customer base, who are bearing more and more of the burden until they can't possibly survive under that. So the idea is that as consumers are making choices, they're still contributing to that pool, which makes it viable for the remaining customers to continue to get that support.
Makes sense. I want to, and I want to come back to, and I guess looking at who the actual participants then are going to be in the market. I think, you know, generators are sort of well understood, the IPPs, because we've had the Renewable Energy Independent Power Producer Program, so that's kind of understood in the market. Users, you know, it's your large industrial users, but a new player that's quite interesting then is the traders. So if we could maybe just unpack a bit more around what are who are these traders? What is required to be a trader? Can anybody decide to be a trader? What's needed?
So mostly, I think the most important thing is the regulatory process to get a trading license. And you have to be able to prove to the regulator that you're a viable entity that's now going to go and enter into these arrangements. But the role of the trader changes when the market opens. Right now, mostly the traders, I know it's not a popular kind of approach, but they kind of are almost like brokers. They're managing between generators and customers. They're bringing generators and customers together, and they're managing that process on behalf of both parties. But the moment the market opens, they actually can start becoming real traders, that they take physical positions. They have customers that they are supplying, they have generators who they're buying from, and they can come to the market to trade deficits and surpluses on a daily basis. And it changes quite a lot of that framework, because right now they don't have options. You know, everything has to be fully committed over long-term PPAs, and they're stuck in the middle trying to manage energy delivery and energy supply. Whereas once the market's there, there's a way to do that, and they can access that market. So the role of the trader changes. They have to then obviously look at building trading desks and that whole functionality in managing price risk, doing probably derivative trading to manage their exposures. So they also then take on a bigger responsibility. And that's why it's quite interesting. I mean, there are many, many traders, and obviously some of them are quite small, some much bigger. There's a strong possibility there might be some consolidation in that process, because then you're taking on a bigger role. Smaller traders are going to struggle against the bigger ones who have, you know, bigger balance sheets, etc. But that's a competitive environment. But I think where trader has a huge advantage in the future is that they would then be able to pool a lot of customers, a lot of generators, and manage a portfolio. As I mentioned, when we talk about the market, particularly when it comes to balancing, for a single generator trying to keep themselves in balance is very hard, particularly a wind farm. And I know, because when we've had discussions around the market code, you know, the wind farms in particular are very stressed about their exposure, because, you know, to predict wind for tomorrow is very hard. And so they're saying, well, if they're coming to the market and they now have commitments around their forecasts, how do they manage that? And there are different kind of mechanisms, but the one, as a trader, if you've got a portfolio, you can offset different wind farms, different solar facilities. Potentially, you could even have your own batteries, that you're managing your entire portfolio and dealing with the market on that basis, as opposed to coming in solo as like a single wind farm, or even maybe 2 or 3 wind farms. So I think traders have quite a big role to play in the market, and they will drive liquidity to a large extent, because they will also be buying and selling these surpluses and deficits on a daily basis, and looking for arbitrage opportunities, particularly if you've got batteries.
If I'm a normal South African, what is the skill set I would have needed? Like what is the transferable skill or business that I'm possibly currently busy doing, and that I'm saying, oh, I could actually get in and become a trader?
So I think that, the traders have been going through a lot of changes in terms of what kind of people they need. Obviously, financial, a lot of it is around looking at your financial risks, your exposure. So you want people with financial background, engineers, to able to understand the technology that you're dealing with, statisticians for the forecasting, because you're working on large amounts of data, and also then you build up trading desks. So you kind of actually want IT skills. I know obviously in the AI world, it's always an interesting kind of dynamics to how that works, but definitely the traders, the more successful ones, spend a lot of time on the IT infrastructure and how are we communicating data, because you're pulling data from different generators, potentially your customers, and you're working out your positions. That is also quite intensive from a data perspective. So I think those are kind of your main kind of roles. There probably are others I haven't even thought of, but to a large extent it does mean that those kind of skills which you found in other industries are now moving into the electricity space. So a lot of the trading people were financial traders. They traded on in different parts of the world and different types of products, now moving into trading in electricity. People who built IT systems for different kinds of facilities, moving into that. So the electricity industry is just pulling in skills from very different areas to make this work on a kind of regular basis.
Yeah, and I love the fact that it's not the typical roles. Yes, sure, you've mentioned the engineers, we know the finances, but that you're actually seeing, IT busy playing such a big role that. I think there's a lot of misconceptions around the sector in terms of who can actually participate, but it's looking like it's actually a wider skill set that's actually needed for where the market's going. I want to actually just ask you, what are some of the biggest misconceptions about competition in the wholesale market?
I think some of the trickier parts is around pricing and what's going to happen to prices when the market comes in. And yes, the big thing with the market is that it's all about price discovery. It's about trying to figure out, what is the true cost or price for electricity at any particular point in time. So I think a lot of people expect either, and again, you get different competing views on this, that the price is going to shoot up because we're looking at the marginal cost of generation, and that's going to be diesel or gas or whatever. And there are examples of that in the United Kingdom. At the moment, a huge amount of pricing is set by gas at very high prices. So people are concerned, are we now going to be, is the price is always going to be set by gas? The other is that prices will drop because now we've got a lot of renewables coming into the system. Their costs are going to bring everybody else's down. And so you now, obviously a lot of the existing generators and some of the existing traders are really worried that prices drop such that the cost of new generation isn't being met. And we know that you have to have a huge commitment to build a new PV farm or a wind farm. Are the prices now going to be too low? So that's definitely one of the big issues that we have to deal with, as to what happens when the market opens, and dealing with some of those competing misconceptions. Technically, all the market is making sure is it's trying to get the most efficient price out, given the information that's there. And it's trying to bring together bits of information about generation availability, generation costs, customer demand, customer responsiveness. How would they want to move if the prices are too high? Would customers pull out of the market? How does that work? And that interplay is really where price discovery comes into it. So it is difficult to say exactly what will happen to prices. And that really is where we just kind of have to always say that the market will try and provide the most efficient price at any particular point in time.
And it is those balance, because obviously from the market's perspective, this is great because it's a competitive market. I can get the cheapest price. But from the generator's perspective, not really the best news, because now my return actually is going to be lower because it's become so competitive. One of the things I want to unpack is, because obviously there's some trade-offs that come into play in designing this market, in making sure that all of these parts come together, right, in a cohesive way. There's obviously the speed with which these projects need to be built, or this market is being liberalized, but you also, we need to be looking at grid stability. We need to be making sure that that's taken care of. We also need to ensure that there's transparency and clarity. What are some of the trade-offs that you guys are seeing, or that you're focusing on in really ensuring that we've got this coordinated market?
So one of the big things with market design, and this is global, this is not a South African problem, it's actually a global thing to deal with, is trying to match the sort of the economics view of the world, as where you want fungibility, you want a huge amount of liquidity, you want standardized products, and you want people to be able to come and participate in the market with ease. Low barriers to entry, all those kind of conditions that work from a pure economic, market theory. And then you've got the reality of what the engineers are trying to do in terms of operate a grid and maintain the grid. The grid needs to be in balance. You've got very specific needs that have to happen from a technical perspective from day to day. So, for example, one of the best trade-offs, an example of that trade-off, is what happens in the day-ahead market. In a more European style market where you're basically matching supply and demand every hour, there's no rules around what a generator can physically be able to deliver. They can come into the market, they can supply, then they've got to go after the fact and look at, oh dear, based on my current position, how am I producing this energy to make that viable? I always use an example as part of our SAWIM school, our wholesale market school that we run. If I go back 20, 30 years ago, we used to have a Majuba power station, was a marginal generator. So it would run it would only be needed for a few hours in the day. But you couldn't possibly pick up Majuba and run it for 2 hours and take it off again. And a European type market might say, well, that's Majuba's problem. They must bid into the market needs them for 2 hours. Now Majuba needs to go and sort it. Well, either they've got to get themselves out of that position, or they have to change the position for the rest of the day so that they're in it. It then becomes an onus for them. The market's purely cleared on a trader's perspective, on an economic basis. But the reality from an engineering perspective is that we need to make sure that Majuba can run for at least 16 hours. It can't just run for 2. So that's where we can move to the more American approach, where you build in all your costs of a generator, including your technical parameters. So as minimum run and uptime, minimum downtimes, the ramping considerations, as well as things like startup costs. You include all of that in your market design so that you make sure that Majuba, when it runs for the minimum time that it needs to run for. And obviously there'll be an impact on the hours where you didn't really need it. So if theoretically you needed it for the evening peak at 6 and 7 o'clock at night, but now you had to run it for the rest of the day, it impacts the prices of the rest of the day because it will suppress the prices because it's meeting the peak, but it's bringing prices down for the rest of the day. And that's just the way it is, so we do a cost optimization. We look over the costs of the whole day and then make a decision as to which is going to run. So it's kind of a more very detailed explanation, but this is where some of those trade-offs take place in terms of market design. Do we go for the European approach? Do we go for the American approach? And we're somewhere in between. We tend to favor the American approach because we want that least cost optimization. We want to deal with the technical considerations. And particularly because most of our generating fleet right now is coal, and very inflexible coal. It can't just turn on and turn off. And whereas in Europe, with a lot of gas, a lot of hydro, and renewables coming in, there's a lot more flexibility, where ours is less so. So we tend to favor more the American approach. But it does mean we try to incorporate some of the designs from Europe to for people who do have flexible power stations or generators, they can act more flexibly, but we're still making sure that we deal with the less flexible generators.
I guess it's being alive to the realities
Yeah,
of all the
exactly.
users in the market. So you need to be sure for these generators have a system that applies for them, but also allows for that flexibility. Sounds like a lot of work, Keith. Like it actually, like your job. I mean, I think when we have our energy careers thing, I'd love us to actually hear more about what the day in your life looks like, because this is quite technical work that you're doing. I want to come back to the grid, and we touched on the grid a bit, and really around how are, when we think about transmission constraints, what impact is this having? How is this shaping where this market's going? Because from what I'm understanding, it's almost all full steam ahead. But what becomes important is we need this grid, because without the grid, you're not wheeling, and if you're not wheeling, then you're actually not having a market. And what are we actually doing? So how's that being balanced? How are we looking at that?
So it basically comes down to this concept of constraint generation or curtailment. The idea is, historically, the transmission planners and the distribution planners, when they looked out in advance, when they've got an application for a generator to come to the grid, they look at what it's going to do to the grid over the next 20 years. And if they feel that there are times that the grid cannot take that energy, they would then say, sorry, you can't come to the grid. They're blocked. They don't get grid access. But there's been a lot of thinking over the last 2 to 3 years to say, well, surely there's a way to still allow them onto the grid, but we just come up with rules as to what we do to curtail them, to say we can't take your energy for the next 3 hours. There's a compensation mechanism, and we'll deal with the compensation. And then that can go to the regulator and say, look, here are these costs. We treat it as an ancillary service. We haven't really spoken about ancillary services, but the whole idea is that there are these different services that the grid uses. Some of them will be constraint generation, some of them will be reserves, and we're allowed to recover those costs from all customers through the network charges. So I spoke earlier about the network charges that everybody has to pay. One of those charges is for ancillary services. So constraint generation now becomes quite a big service that the system operator will pay for. So they will compensate the generators that now can't supply and then recover their costs from all customers. Obviously, there has to be some boundaries around that. Otherwise, there's a huge risk of just adding lots of generators and curtailing them all. So the idea is that the planners now look at it and say, if the regulator allows that we can do this curtailment, and at the moment the regulator's given us we're only allowed curtailment for the Eastern Cape and Western Cape, and only for the next 3 years, or next two more years left of it. We need to have a more broader approach to say you're allowed curtailment forever, but obviously annually there'd be some ability to manage that from a regulatory perspective. But the idea then is that it frees up the grid, that you can add more generators while you're building grid. So at the moment we hold back the generators until the network's built, and that becomes inefficient because the network's going to take about 5 to 7 years to be built, or depending on where you are, some a bit longer. Whereas you can actually free them up, that they can connect, and they will take 2-3 years to be built. Then there's a window where for 3 to 4 years, you're letting them access the grid, and then you're curtailing them. But at the same time, you are building up the grid. You're catching up with the grid so that eventually you can reduce the curtailment. So it is a matter of timing, trying to deal with that. So obviously grid constraint is a big component of what we're dealing with at the moment. There's obviously a lot of history to this around why the grid hasn't been developed sufficiently over the last 5 years as this new capacity is coming on. But I think to a large extent, a lot of it's also just the volume of interest from generators is now so huge. The network has to be built at incredible speed. So that's why the transmission development plan that was released about 2 years ago or so talks about the scale of what we need to build over the next 10 years and trying to now get it implemented. Part of that is then the NTCSA is now going and investing a lot in the pipeline, getting new capacity built as quickly as possible, but also opening up for independent transmission providers. So this means that you can actually, from the transmission development plan, point out a few lines or specific projects that you can now outsource. And you go and you let the market bid to supply that particular project, and they would own and operate that project, and you essentially lease the project. So a lot of that is kind of being finalized now as a framework as to how do we go through that process? How do you open up the market? How do you deal with the revenue and paying for that? But it's purely because we need to spend so much, we need to build so quickly in order to open up the market for new entrants, basically.
I want to, and Rizzi, bearing in mind that the average listeners maybe not been in the sector, I want to come back to curtailment and just unpack that a bit for our listeners to better understand. If you could just simplify the whole process of curtailment and up to how much can you curtail, how does it actually work?
So if I'm going to pick on an example that I always use is that at the moment there's a wind farm supplying Sasol and it's wheeling through the system. They're a private player supplying a private off-taker. We do not curtail that wind farm right now. The mechanism is they don't get curtailed because we don't have a way of compensating. Whereas a plant that's come through the Section 34, a wind farm, they would be selling to the central purchasing agency, they can be curtailed because we have a way of compensating them, because we're contractually buying that energy. So that, and it happens a lot, it happens quite a lot more these days than it used to, where we will actually ask them not to produce or ask them to back off. So if you've got a wind farm that could be producing 150 megawatts, but now the grid can't take that 150, we'll ask them to go down to 50. They then get compensated through what we call deemed energy provisions in the power purchase agreement with Eskom or with the NTCSA. So that agreement, we'll go and say, well, what could you have produced? And it's quite a tricky kind of formula to go and look at what was the wind doing, what was the availability of that power station, that they could have done 150, but now because we've backed them off to 50, obviously we pay them for the 50 under normal sort of energy. The 100 that we now back them off, we pay deemed energy as if they had produced. So that at the moment is curtailment, is deemed energy. We go to the regulator and say, look, this is what we spent on this for the Section 34s. This is why. There's a report for every instance. And then the regulator says, yes, you're allowed to recover that money as part of our energy charges. But now the one that's private to private, we're not curtailing at the moment, but we need to come up with a mechanism. And the rules, the market rules do that, where we, instead of paying the generator, what we would do is make sure that Sasol, as the example here, or the off-taker, gets its energy. So if the wind farm says, I'm ready to do 150, it declares that day ahead, we will make sure Sasol gets their 150, even if we back off the generator by 100 megawatts. So we'll curtail them. We ask them to back off because now the grid can't export their energy, can't transport it. We will find another generator to produce that 100 megawatts. Sasol will get their credit as part of the wheeling framework, and then that 100 megawatts that we paid for, because now we paid someone to generate that, that becomes part of our constrained generation, our sort of fee that we have to recover from all customers, because we're making sure the delivery took place even when the network couldn't actually.
So Keith, you're saying that, you know, you have a scenario where you've got a wind farm that's going to pay into a private party, but you're saying, no, Sasol generator, don't give me your full 150, just give me 50, but I'm going to go and take 100 from another. Is it because they're based at a different location,
Yes,
I'm assuming?
exactly.
So it's just easier for their power to flow through this way as opposed to flowing from their system.
Particularly because, you know, the wind farm would have been constrained in some way that the network just couldn't take the energy. And so we would then make sure that that's compensated. There are two types of curtailment that takes place. Firstly, we've got the network curtailment. So if the network can't take the energy, so for some of the reason there's a local problem, and so we have to bring the wind farm down and we compensate accordingly. The second is because of system conditions. Most of what we do at the moment is more system conditions than network when it comes to the curtailment, because the system finds itself oversupplied suddenly. And it used to happen at 3 o'clock in the morning when the wind would be blowing like crazy and our generators couldn't back off enough. The system operator would go and tell the wind farms, look, we need you to back off. They'd get compensated for it, and we'd then meet supply and demand. Now, in the middle of the day, because of the prevalence of PV, our generators, actually, the Eskom generators performing better, you now actually carry a lot of excess capacity in the middle of the day. And so now the system operator has to ask the PV and the wind farms to back off, because now we're oversupplied. The energy, there's too much energy and not enough demand. So we actually ask the generators to back off, and then we compensate them accordingly. But technically, that's not constrained generation. That's a balancing issue. And so in the market, we would deal with that as part of a balancing mechanism, whereas constrained generation is when the network causes it, because now the network can't transport the energy. This is purely supply and demand. It's out of whack, and now we have to deal with it through balancing.
Okay. And then, Keith, you also mentioned and touched on ancillary services, and that's a core area of this whole market. Do you mind just unpacking that a bit for us?
And the name ancillary services is kind of has a huge history behind it, but the whole idea is that historically, generators produced energy, and they sold energy. Ancillary services was sort of the byproduct of they would produce energy, but they would also be able to do voltage regulation. They would be able to do constrained generation, different kind of services that the grid depended on. And over time, particularly as markets were opening up, and this was particularly in Europe and in America, is that the generators were saying, but hang on, you're getting this service for free. I'm selling energy, but you're depending on me. I need to be compensated. And so then you kind of developed ancillary services as a series of services that the grid requires. So the grid needs, for example, reserves. So when we talk about reserves on a day-ahead basis, the system operator wants to make sure that in real time, tomorrow, it's got 2,000 megawatts of capacity that it can call on when something changes. And so it will contract for reserves. So in South Africa, we call them instantaneous regulating 10-minute reserve. But theoretically, it's just types of reserves that have a particular speed with which they can respond. So the system operator will depend on the day on having different types of speed. So if there's a problem, it can call up certain generators, and sometimes even some customers can do quick response. They can turn off their smelters, or they can ramp up their generators, and the system operator will pay for that because it's an insurance. Again, on the day, I'm going to have this capability to manage this. Others are sort of more longer term, like, for example, we have this concept of black start and islanding. Black start is the capability for the system to restore if we lose the entire grid. It's never happened in South Africa, but it's kind of happened in, like, we saw recently in Spain and Portugal, where they lost the entire grid and they had to start up within 24 hours. Well, they managed to start up within 24 hours. For us, it's always this biggest fear is that if for some other reason the wheels came off and you had to start up, how do we restore? Because one of the biggest constraints is a big coal power station can't start up without some sort of electric input. It's not self-start. It needs something to supply to get all your, what they call the house load, but all your local activities going in order to start up the boiler and get everything up and running. So what we do is that we contract for some particular facilities. So for example, at Kendall, there's a gas turbine, which can, a diesel generator, which can start up, and then it can start up the other units. And the same at Drakensberg Power Station, which is pump storage. It's got water in the top dam. It has to keep a certain amount of water in the dam. And we pay them to keep that water there, because if there was a crisis, we would need them to have water available to be able to start up the whole grid. So that black start capability is an ancillary service. You're paying for people generators, customers, whatever, to provide some of those services that if the system needed it, they would be there. Similarly, we do voltage regulation and reactive power, also different services. So the system operator likes to call them essential services, because the phrase ancillary services means, well, it's like something on the side, whereas this is something that actually the system operator can't function without having these services. So we go and we procure that from generators and from customers, sometimes on a longer term basis, sometimes daily, to make sure that we have the capability on the day to operate the grid.
Okay, good. Yeah. And then, Keith, I want to also, and I think, you've touched on and mentioned SAWEM School. Yeah. And I think that's quite an exciting development and an interesting one. I'd love it if you could just share a bit more around that. Like, who is the school open to? Where is the school? What's actually covered in the school?
So the idea of the SAWEM School is that, when we started this process like 2 years ago, we kind of ran these market code workshops through 2024. We did these regular 10 workshops where we just kind of interacted with industry around the changes for the code. So the code itself is the set of rules that run the market. As part of that process, we realized that, there needed to be a lot of training in terms of what the market was about. And there was input from some of our, so we've got a consultant who works with us a lot, who used to work at Nord Pool. And he said, well, you know what, for people to enter into the market, they have to have gone through some sort of training before they can allowed to, get involved in the market, because we need to know that they're not going to bring the entire market down. So we then put together this process with the SAWEM school, which is really a 3-day program. It's very intensive. Like our feedback we often get is that at the end of the 3 days, people are like, well, that was like way too much. We'll have to come back in a few months' time and figure out some more about it. But the idea is that it's kind of almost like a crash course in the theory of the market, how we implement the market in South Africa, and then we have a simulation, a game that people play to do bid and the offer against one another to see how strategies work in the market. And so we started that in July last year was our first official SAWEM school. We did do a dry run beforehand, just checking on what we were teaching, what was our content, and getting the game up and running. And that was also mostly developed in-house. The content, we had a lot of help from the guys from Nord Pool and Bredesen Consulting, putting a lot of that together. But the idea was then we started this process in July, and we've kind of learned a lot ourselves through this process. We did almost 2 a month through most of the last year, 6 months, so end of 2025. And then we just realized it was actually taking up a lot of our time because we were trying to implement the market at the same time. So we tried to do 1 a month this year. And the whole idea is that every month we've scheduled for the whole year, and we then go and look at sites as to where to roll it out. So for most of the last year or 6 months, we had a lot of sponsorship. So originally we had GIZ giving a lot of sponsorship. GIZ is the German agency. Then also Discovery Green. We had the South African wind industry, SOEA, as well as Conlog and a couple of others, all helped us with like dealing with the logistics, so we could go and run it out at different places. And mainly we focus on the universities, particularly the Wits Business School, the UCT Business School. We're actually, this month, we're doing Gibbs Business School for the first time. We've been down to Standard Bank also hosted us at their Durban site, Conlog and Durban. So we're trying to go to different areas. So at the moment it's Joburg, Cape Town and Durban, but we're always open to wherever. But the idea is to kind of then get in people. So our aim is sort of 50 to 70 people in a particular session. We don't want to go more than that because it's interactive. And specifically with this simulation game, you want to try and make sure that people you go into groups. We have 12 facilities, some demand side, some generators, and they all bid against one another and kind of then see the outcome. And we do the day ahead, intraday balancing, and we run that through twice, sometimes 3 times if we have the time, just so people can get the feel for how the market actually, how the rules work and the market mechanism works. So that's been very successful. I mean, we're always oversubscribed. Almost every time we have a session, people are posting on LinkedIn or something about this process, and then suddenly we get another 10 to 20 applicants. So it's kind of working quite well all on its own. Most of it around just interest, because people are interested in the market coming, so they want to know how. And so we certify, and we do have a test at the end of every of the 3 days, and then people get certifications so that when the market does open for them, they have to have had this certification before they're allowed to come and participate.
Okay. So anyone, just anyone can just sign up. They just have to look out and see where would they find information?
On our NTCSA website. So if you just go to www.ntcsa.co.za, then you'll go to the market operator part of it, and you'll see that there you can go and register.
Okay.
So again, for the last 9 months, because we were sponsored, it was a nominal fee. It was like 1,500 to come to the whole thing, because we just wanted people to book a spot and not appear because it was all being sponsored. But now we've kind of made it self-funding. So it's 4,500 for the 3 days. And then you basically get, you come along, you get the training and the certificate at the end of it if you pass the exam.
Okay. That sounds exciting. I think I will be seeing you at SAWEM School soon. Just to, I want to close off and really just around, because we've spoken about the different parties in it, and we've also even touched around municipalities, right? And what that means. So in anticipation, because there's a lot that's, there's SAWM school, there's a lot that's been put in place. The individual players need to also be getting ready, right? So what should municipalities and even your large users, developers, and even SMMEs, I don't know if there's a part or a role where SMMEs get to play in this, but how do they get ready for this next phase?
So I think, again, different players would have different priorities. So I think for municipalities, one of the most important things is that differentiation between their role as a network business and their role as a retail business. And distribution, Eskom distribution is having to go through that same kind of thinking about it. Like, as a network operator, municipalities are a local monopoly. They must earn their revenue. They need to be able to operate. But as a retailer, they're going into almost a competitive space where their customers are going to start going directly to the market or going to other suppliers. So they need to prepare for, what does that mean? Splitting the business, looking at these different things. It might mean that you have to consolidate network providers across different areas, and potentially the retailer as well. But it really is, from a tariff perspective, making sure you understand the costs for the network versus the cost for retail and dealing with that. And I know so different municipalities are at different levels on that. There are 180 odd municipalities. So it's going to be very different. So the ones that are more advanced might be ready in time to become market participants. For them, there's Municipal Finances Management Act. There are certain regulatory requirements imposed by National Treasury that they're going to have to go through to deal with that. What we see from the market is that we will never be able to have someone who comes to buy in the market unless they pay upfront or they give us bank guarantees. We can't manage non-payment.
Okay.
The market is very clear, and the rules are very clear about prudential requirements, putting that money down upfront. And obviously for a lot of municipalities, that's going to be a problem. And there have to be mechanisms in place to deal with that. But for most of the others, so the traders, a lot of the traders that I've dealt with, they've all been coming to the SAWM school. They're getting themselves ready. They're thinking about what this means, and particularly the pricing. As I mentioned, there's always this fear about where the prices are going to go. What does that mean for their business in the future? And also new developers, what they mean when you've built a generator. Am I selling to a trader? Am I selling to a customer? Am I selling to the market? A lot of that's new, and there's some of that has to be thought through as well. So yeah.
Okay. Keith, I want to, I guess, your final comments or your final thoughts around, the future of the South African wholesale market. What is your parting shot that you think every South African really needs to hear from you?
I think the big thing is to kind of consider that reform is messy. Reforms are difficult, and there probably will be times where we will trip over ourselves because we're moving at a certain pace. But the whole idea is that, we're allowed to learn by doing. And I think the most important thing is to just keep moving forward. And we might slow down to deal with certain things, but the process is there. The market's already here. It's now trying to make sure that the market is more efficient. And specifically, we didn't talk about retail competition, but at some point, the end goal really has to be customer choice, even at a household level. That, the same way that you can choose your cell phone provider and use the same device and switch providers, theoretically, you should be able to choose your electricity supplier, even if you're keeping the network as the same network. You're not switching cables. You're now able to go and choose different providers and the one that gives you the best deal. So that really is something exciting to look forward to, but it's going to take us a bit of time to get there.
Well, I'm excited to have you back then for that conversation. I hope you will come back. But thank you, Keith. Thank you so much for so much knowledge and insight that you've really shared. Thank you very much for being part of this conversation.
Pleasure. Great to have the chat.
And then to our listeners, if you found this conversation useful, please share it with somebody who would be interested in better understanding the South African energy sector and the system that is actually changing and where they currently fit within it. Because the reality is participation in this transition is not going to be automatic. It will be shaped by understanding, readiness, and access to information as well as opportunities. I'm Thokozile Zambane. This is Energy Conversations. And until next time, let's keep the conversation going.
Thank you for listening to Energy Conversations, powered by Kani Development Solutions and the African Energy Leadership Center at the Wits Business School.